in AI. The South Korean chipmaker has made Wall Street history by raising the most money in a Foreign American Depository Receipt, or ADR, listing. And it is also the second largest share sale in the U.S. behind SpaceX's record IPO. The company priced its ADRs at $149 each. SK Hynix says that represents a 2.7% premium to its average share price over the past 3 trading days. 10 ADRs represent 1 Seoul-traded common share. In Seoul, the company's shares closed marginally lower today at more than 2 million Korean won apiece. For more analysis on the chipmaker's U.S. trading debut tonight, let's bring in Peter Kim. He is Global Investment Strategist at KB Financial Group. Peter, good to have you on the show. Now, it's been a pretty volatile week for Korean stocks, with the Kospi briefly slipping into bear territory. What does that tell you, or does that question gives you pause about the durability for the demand for SK Hynix once it actually starts trading?
Maybe in the short term. I mean, given the outside gains that both Hynix and Samsung Electronics had from last year, I mean, you couldn't blame any investors for taking profit. Now, when you mentioned about the demanding valuations on a trailing basis, they may be demanding, but if you look forward 12 months, they're at single digits. So I think the demand for SK's listing in the US, I think it's 7 times oversubscribed. I think that indicates how institutional investors feel about that.
And for viewers less familiar with ADRs, can you quickly explain what it means for these shares that are trading on NASDAQ in US dollars versus the local listing in Seoul?
Right. Well, the listing today represents about 2.5% of outstanding shares for SK Hynix. SK Hynix until today was only available on Korean Stock Exchange. Korea has a fairly restrictive ID system, which prevents a lot of the institutional investors, even the globally well-known ones, to access easily. So this listing allows whole group of institutional investors and some individuals to be able to buy SK Hynix shares, and that should not only provide a lot more liquidity globally, but also hopefully it'll lead to higher valuations.
And if the conversion between the Seoul shares and the NASDAQ ADRs is limited, could the ADRs then trade at a premium? I mean, for retail investors, does that make the NASDAQ listing easier to access, but potentially more expensive?
That's right. We do have a similar case many years ago when TSMC from Taiwan listed their ADRs, and they still traded a reasonable premium. So Korean regulators have suggested the idea of maybe allowing more fungible conversion between the two, local and the US, and that's probably will happen if the US listing starts to cause significant premium. And that should ease a lot of the investor concerns about potential for arbitrage.
Peter, SK Hynix currently trades at a lower forward multiple as compared to its competitor Micron. This is despite its strong position in the high bandwidth memory chip sector. Is this a clear example of the so-called Korean discount? And do you think the NASDAQ listing will actually help close that gap?
Yeah, definitely. I mean, two stock markets have very different listing requirements. For what it's worth, globally, it is considered the U.S. listing is a lot more stringent in terms of requirements. So for SK Hynix to be first list its ADRs, not only provides certain more comfort and confidence for amongst investors, and also just from a liquidity and marketing standpoint, just to bring its profile, because you'd still be surprised how many clients in the US that I meet, very, very not that familiar with SK Hynix or the Korean market for that matter.
Okay, so the deal, though, was more than 7 times oversubscribed, which is huge. Does that tell you that there's confidence in SK Hynix, specifically just how strong is demand with AI-related names right now?
Absolutely. I mean, the past couple of weeks been very volatile. I think it's more got to do with just the simple consolidation technical reasons rather than deep fundamentals. Obviously, nothing can go up 2-3% every day. If you consider SpaceX IPO was 4 times oversubscribed versus 7 for SK Hynix, I think that already tells you between the two issues, which one is the much more sought after. I think for global investors, I think semiconductor story is still very compelling. Again, I go back to fundamentals. Earnings are very, very solid. Visibility is high, and based on those earnings, valuations still at a deep discount.
Okay, we will definitely be following very closely as to how the shares are doing trading later this evening. That was Peter Kim, Global Investment Strategist at KB Financial Group. Next, chip